This is Fintech Insider News, and this week we're talking about they've finally done it. Revolut has finally got their UK banking license. Accelerator fund Archie announces 2 investments into some really interesting fintechs to supercharge their growth. And UK fintech Plum are here to tell us what they're going to do with their new £16.1 million investment. We discuss all of this and much more on today's show, so don't go anywhere. Hello and welcome to episode 882 of Fintech Insider. I'm David Barton-Grimley, Fintech Strategy Director right here at 11FS, and I'm joined this week on Fintech Insider News by 3 guests who are here to break down the biggest stories from the past week in fintech and financial services. Firstly, welcome to the show, making their first Fintech Insider debut. We have Anthony Thomson, co-founder and chair of Archie. Welcome to the show, Anthony. You've got some exciting news, which we'll get into a little bit later. But in the meantime, please tell our listeners a little bit about yourself and Archie.
Be delighted to, and thank you for having me. My name's Anthony Thomson, as you say. Background is in financial services. Since there were dinosaurs, I was the co-founder and chair of Metro Bank, the founder and chairman of Atom Bank, the co-founder and chair of Bank 86400 in Australia. Most recently, the co-founder and chairman of Archie, which I'd love to tell you a little bit more about as we go on.
Awesome. It's wonderful to have you on, Anthony. And next up, it's another Fintech Insider debut. Please welcome Abhishek Choudhari, VP of Product at Plum. Really glad to have you with us, Abhishek. You've also got some very exciting news, which we're going to discuss shortly. But please do tell us a little bit more about yourself and, for those who don't know, Plum.
Sure. Hey, David. Thanks for having me. Excited to be here. I'm Abhi. People call me Abhi because Abhishek gets a bit smudged at times. I head up the product and design team at Plum. Prior to Plum, I was in product leadership roles at Revolut and Wise. I've been in fintech for the last 6 to 7 years. Before that, I was in travel. Prior to that, I was in content. I've lived across the globe. UK is the 7th city where I'm kind of moved to. So I'm happy to be here. And excited to talk about Plum. For the listeners, quickly, Plum is a smart savings app that helps you save and invest without having to think about it. We'll talk more about what we've been up to, so I can share more about what we're doing.
Awesome. It's great to have you on, Abhi. And last but not least, it's a warm welcome back to the podcast for Veronica Glab, Head of Partnerships and Investment Lead at Innovate Finance. It's always great to see you on the podcast, Veronica, and actually in person in our studio, which is amazing.
Thank you. Flattered to be here.
Yeah. How are things with you and what's going on at Innovate Finance?
It's been quite busy for us. So, we've just put out our latest investment report covering the first 6 months of VC investment into global fintech. That's obviously had quite a lot of tie-ins to our messaging to the new UK government that's come into place. We're winding up for our 10th October Fintech for Good conference. And then after all of that, I'll be winding down a little bit for a little bit of travel and a couple of stealth projects I've got up my sleeve.
Awesome. Sounds very exciting. And with that, let's jump into the news. Now, our first story this week comes from the FT, and it's the one you've all been waiting for. Revolut scores UK banking license after a 3-year wait. So it's finally happened. After an agonizing 3-year wait, Revolut have been given their UK banking license. Who saw this coming? Well, we hate to blow our own trumpet, but
I think they will. I think that'll be the year. I think Revolut will get their banking license this year. I think they've put in the foundations. I think they've got the relationships. I think they've done well. I think they'll get to that point now, which is great.
And he was right. That was our CEO, David Brer, confidently predicting this would be the year Revolut got their UK banking license back on our January predictions episode. So let's give a little bit of background here. The UK neobank applied to the Prudential Regulation Authority all the way back in 2021, so it was a long time ago. And a process like this would normally take about 12 months, right? In this case, it's taken 41 months. In March 2023, the company said that they would be getting the regulatory nod any day now, so that was over a year ago. Revolut was granted a European banking license by Lithuania in 2021, allowing it to operate as a bank in major EU markets. It's really positive news for the fintech giant, which is on the up recently after years of bad headlines, from repeated failures to file accounts on time to their CEO, Nick Storonsky, being forced to give up his Russian citizenship, which is pretty profound. And it's another indication of sustained growth to come. Just this week, the Wall Street Journal reported that Revolut is pursuing a share deal that would give them a $45 billion valuation, which we've discussed on a few podcasts in the past, I think. Veronica, so I want to come to you first. So you wrote a nice little explainer on LinkedIn when the news broke, asking, are we so back? Why has this caught your imagination?
I think it's because for those of us who are in the industry or like to call ourselves Fintech Insiders, we have been watching this sort of drama unfold around the banking license topic. Revolut is one of the OG neobanks alongside Monzo, Zopa, and others, and it's been left out of the banking license club. And it's also just one of those companies, and Nick Storonsky's just one of those founders that everybody has an opinion on. He has been incredibly frank and confident about wanting to take his company all the way through IPO, make it the everything app, make something really massive and historic out of it. So he has a vision, and he refuses to settle for anything outside of that. And then as the industry has been following the ups and downs of this story, I think it's actually just become a metaphor for where fintech can go.
Yeah, I agree. I mean, why would you say it took so long? I mean, we've talked a little bit about press, that being one, but yeah, have they put the bad times behind them?
I think they've put this chapter behind them. And to their credit, they have come out of a number of negative headlines with, the right fixes to a number of different situations. But here's the thing, is this is not happily ever after. It's like saying happily, and then they lived happily ever after, and then that's the end. But no, that's just the wedding day, and then you still have to go through the rest of the journey. And so that's what Revolut has to do is, this is the happy ending to one particular story, but they are going to have a number of triumphs and tribulations over the years because this company is going to be around for a long time to come.
Absolutely. And it'd be really interesting to see what it does for their profitability as well, but potentially very positive for that. Anthony, I'd love to come to you and your perspective, being in banking for years and years. Is this a watershed moment for the UK fintech sector? I mean, does this have a profound meaning for challenger banks?
No, I don't think it does. It's to your earlier point about licensing. Yeah, I've been around this particular block twice before with Metro Bank and with Atom. Metro Bank took about, from memory, 20 months. Atom took about 14 months from memory. Both are UK domestic banks, very simple balance sheets. Whereas Revolut is a very big, complex, multinational business. So I think that it's not surprising that the PRA have taken so long to look at it. Yeah, I have no inside knowledge. There was press speculation a year ago, more or less, that it was to do with an incomplete set of filed accounts. It doesn't surprise me that it's taken a long time. But the reality is all a banking license does is allow you to take deposits from consumers and apply the deposit protection scheme on their behalf. Getting liabilities, building liabilities is easy. Deploying them as assets are the hard yards. And I think Revolut are already a long way down that particular path. So, small earthquake in South America. It's not a big news story. I think that they've got the license.
Yeah, it's very interesting. I suppose we knew it would come eventually, right? Abhi, I'd love to get your perspective in fintech at Plum, kind of looking at this unfolding. And you've also got some very positive news coming up, which we'll talk about in a little bit. But how do you think this affects the industry that you're in?
I think very positive. Like end of the day, I think all of us in fintech, right? Like we're here for our consumers, the customers, more competition. I have always believed is good for the market because it keeps everyone on our toes. I know how hard the teams at Revolut have worked for this. Like it's amazing to kind of see this come across. I agree that it was a matter of time. They would get it at some point, but it shows that like kind of competition is increasing. It builds up. I feel like all competition is good competition. And I really believe that this will help us kind of make sure that customers still keep getting the right outcomes.
I'll just add, if I may, to Abhi's point, which I think is a really good one. The more competition is good for consumers. The regulator can't regulate better consumer outcomes. They can introduce all the regulation in the world, prescriptive, directive, however they want to do it. What gets better consumer outcomes is more competition. So I absolutely agree with Abby that this is good for consumers in the UK and elsewhere, obviously.
Awesome. Veronica, do you want to come in? Any final comments?
Yeah, no, I think it's actually a really great piece for consumers as well, because it's an opportunity to, particularly for consumers that might be closed off from a lot of other traditional banking products that are available. It is going to be a product with a really good tech stack behind it that is available. That is a big step towards financial inclusion, probably for a lot of UK consumers. And then for those who maybe have a little more choice in their portfolio of banking products, it is an additional service that now might be more competitive, might have an edge, whether that's in terms of customer service or a savings offer or, whatever other advantage that is. And it's another place that you can park your money and see it do interesting things.
Yeah, I agree. It's going to be so interesting to see how this battlefield plays out because, pretty much everybody is looking horizontally to launch new features, right? I mean, there's also Monzo looking into pensions, for example, which I think we're going to cover a little bit later in the podcast. So it'd be really interesting to see all of these challenger banks have different angles in for how you can manage your money, and I guess that's where the competition comes from. We were talking a little bit earlier about some of the negative press I think that Revolut had over the years and how they've crossed that line into something a little bit more positive. We just wanted to spotlight some really kind of fun analysis that we saw from the Evening Standard. They did this a couple of weeks ago of Revolut's kind of very long campaign to detoxify themselves. And so the Evening Standard actually found out that in their financial reports, mentions of the word crypto had fallen from 1.1 mentions per page in 2018. Back in the day when I suppose everybody thought that crypto was going to be the future and probably the key to their valuation, to just 0.1 mentions by 2023. So that's kind of an interesting kind of thing that it's almost as if crypto really just doesn't have much of a place anymore. I mean, any thoughts on that?
I would probably chip in a bit. So I think if you look at like the product experience of Revolut, I'm a very product person, right? Like I feel like your strategy kind of reflects in your product. So product went with a refresh of their app. If you look at the app, crypto is right there on the home screen in navigation. It's right up front center. The regulators have kind of taken a stance on crypto. Be prepared to lose all of your investments. You won't be protected. Very clear statement, right? Like but Revolut have gone ahead. They've given it space on their home screen to navigate easily into crypto. So I think they're still bullish on crypto. Generally, as a market, I wouldn't know if like the market is bullish or not, but I feel like from Revolut's perspective, I get that they wouldn't kind of mention crypto, but I think they would still want to kind of keep crypto as one of their core components. Given the interest rates, of course, the revenue is more diversified at this point, but as the interest rates normalize, as crypto market kind of evolves over time, like it would be interesting to see how their reports kind of look like year over year.
Yeah, I may be a bit of a Luddite. I'm not a great fan of crypto per se, but I am a huge fan of the technology, the distributed ledger technology that underpins it. And I think that will have a huge future in their business and in many other businesses, particularly in remittance transfers. I can see a time in the future where this is just going to be absolutely instant.
Yeah, it'll be very interesting to see where crypto goes in the future. All right, now next up, we're going to talk about Archie. So Archie makes first investments in two leading fintech disruptors. Fintech accelerator Archie, led by industry veterans Anthony Thomson and Steve Brennan, has announced its first investments in two promising startups, SME champion Waymo and sustainability-focused Echo. Archie aims to boost the odds of success for fintech disruptors by investing intellectual capital, offering expert guidance and operational support instead of just cash. Their first investments are in Waymo, which specializes in cross-border payments for SMEs, and Echo, which offers integrated sustainability solutions. Archie's team will work closely with these startups, providing strategic support and helping them navigate the challenges of scaling up. So, as you all know, we're joined here today by Archie's co-founder and chair, Anthony. So, Anthony, first off, congrats on the investments and congrats on Archie in general. These are some very, very interesting companies. I mean, what can you tell us about them?
Well, if I can just give you a little bit of background to Archie first, I promise I won't make it a commercial. About 2 years ago, following a a big operation. I was stuck in bed, unable to do anything for almost 6 months. So I started looking at the venture capital industry. And I've been both a recipient of venture capital and equity capital, raised over $1 billion in the last 11 years. I've also been an investor in businesses. So I've seen it from both sides. And the more I looked at it, the more I came to the conclusion that for fintechs to survive, and I'll be really interested in Veronica's view on this, they need more than money. For many fintechs, they reach an inflection point. They've got product, they've got product market fit, they've got a little bit of revenue, they need to scale their business. And it becomes a really critical juncture in their development. And so many fail at that point. And if you look at the statistics, 75% of all venture capital investments fail. So money cannot be the key determinant in success. You look at funding graduation rates from very early pre-stage through Series A and so forth, and funding graduation rates fall off a cliff. And what interests me was ultimately all businesses that fail because they run out of money. That's a bit like saying on your death certificate, it says you died because your heart stopped. It says that on every death certificate. What's more interesting is, why did your heart stop? Were you run over by a bus? Did you die of old age or whatever? So I was much more interested in, why did these businesses fail? And for businesses approaching Series A, looking to scale, they seem to have founders in many instances who have a great product, created a great customer experience, but didn't have the experience and the expertise to scale the business. And in a nutshell, that's what Archie's about. Steve Brennan took eBay, PayPal, Uber, in Uber's case, from less than 10 million customers to over 110 million customers. My colleague Tommy's taken businesses globally across 13 different territories. I've got a little bit of experience in building out fintechs myself. And we think that we can help some, not everybody. There are some fintechs who can do this without our help, but there are some that we think we can help super scale. So that's what we're up to.
Absolutely fascinating. I mean, and also, as you know, I've been a co-founder in the past as well, and I totally identify with that. And it's one of the first things actually I've asked of VCs and even angel investors is, how are you going to be able to help me? Veronica, I mean, to Anthony's point, I'd love to get your point of view.
Yeah, well, absolutely. So Anthony, I think you touched on something really interesting there when you said intellectual capital, because I think VC capital tends to be quite notoriously very impatient, and then you have patient capital. But I don't think we've talked about intellectual capital yet. And it gets to the heart of exactly what you said, which is, why does a business's heart stop? When we had boom years in 2021 and 2022, we saw such a massive flood of capital into the global fintech sector. But, we have over 2,000 fintechs registered in the UK. That's a lot of fintechs for a very small country. And so not all of them are going to be scalable. Not all of those ideas are even going to be original and really, needed in the market. So I think, just as any founder would hope that a VC that they work for has a solid platform, I think there's a step above that, the industry can really go to, is to really pick apart, what is this product's fundamental USP? Is this an original idea? What does this idea really need to flourish and thrive, and really, really pick it apart? So yeah, I mean, look, I would broadly agree with you that startups, across industry, need more than capital. They need something a bit more intelligent and a bit more strategic to get them over the line and get them scalable. I do think the one not quite exception there of what I would say is when we talk about diverse founders, so women, people of different ethnic origins, LGBTQ, we're also talking about very capable founders who just don't get heard and don't get seen. And I think that's where maybe I'll take a bit of exception and say visibility is still really important for founders. So again, if you take intellectual capital, though, you really assess who your founder is to look at who your founder is and not just the idea.
Yeah, absolutely.
And I think from our perspective, we're putting our money, as it were, where our mouth is, that we only do this in exchange for equity. So our interests are absolutely aligned with those of our portfolio companies. If they don't succeed, we don't succeed. We were very clear from the outset. We don't take fees. We don't take payment in cash in any way. It's only equity. So we are absolutely aligned with our portfolio companies. If they don't succeed, we don't succeed. If they succeed, we hopefully share in some of that upside.
Anthony, I'd love to delve a little bit deeper into, how you deploy intellectual capital, let's say, and maybe we can talk about through the process of these two particular fintechs that we're talking about. How would you go about identifying them and making that investment?
So we've talked over the last 10 months to over 200 prospective portfolio companies, and interestingly, we've been talking about us versus VCs. It's actually us alongside VCs, because most of those introductions have come from VC firms. And indeed, on one instance, a VC firm made their cash investment predicated on us working with that portfolio company, although for various reasons that didn't happen. So one of the first things we do is we run a series of workshops with our prospective portfolio companies, when helping to get to know each other, them getting to know us getting to know them. And it helps us understand what the real issues and challenges facing them are. Because we've all presented to VCs at various times in our past, and you always put your best face forward and say just how wonderful our business is and how wonderful the opportunity is, and it's going to be fantastic. What our workshops do is really sort of delve into what are some of the key issues and challenges, the pain points that they think they're going to face. And even if we don't work with companies, we give them the output of these workshops, which will hopefully be helpful to them. But having gone through that process, we like them, hopefully they like us. We understand their business. We think we can add some value. It's then about looking at exactly which areas we can play in. I think, hopefully without blowing our own trumpet too much, we're good at helping businesses scale. We have all worked in the financial services sector for many, many years. We talked earlier about Revolut and the regulatory process. I've been through that many times. I've chaired 3 banks. My colleagues have worked in strategy, in growth, understanding the corporate governance issues and the levers that help build these businesses. If it's a software business that's going to sell reg tech to the top 10 banks in the world, we probably can't add any value to that process. But if it's a B2B or a B2B2C business where they're looking to scale either in the home market or in other markets, hopefully we can help both through our experience and expertise and playbooks that we've built over the years to basically hopefully see some of the problems that they're going to face before they get to face them. And having been around that block, have some potential solutions that will help them scale faster.
Yeah, absolutely agree with that. I mean, the expertise that you bring as well would be so invaluable to these businesses. I suppose just as a final point to Veronica's point about visibility, and that's also something that I identify with as well. I mean, it's just, okay, how do I find these people? How do I find these amazing VCs and funds? Where am I going to get the money from? How does a fintech founder, if there's any fintech founders maybe listening, find out about you and go through that process?
Well, I think, much I'd like to say we are the only solution. Businesses need money and they need support to help them grow. There's some great VCs in and around the world. We work in Australia, the UAE and the UK. And in every market, there are some really smart VCs with funds available. I think, again, to Veronica's point, 2 years ago, the markets were flush with money and, frankly, ideas that shouldn't have got funded or management teams that shouldn't have got funded did. I think the pendulum has swung back, that funding is now harder than it used to be. But ultimately, I think great business ideas with great teams will find the capital. Hopefully, they will find us to work alongside them. As I say, not everybody will need us. There are some really great second or third time founders who've been around the block and know how to do this. I'm not sure how much value we could add to them, but there are lots of people who haven't got that experience that hopefully we can assist them.
Awesome. And on that note, we're going to be talking more investments with Abby and Plum coming up right after the break. So we're just going to take a quick pause here. Back shortly. Welcome back. Now, before we get back into the news, we want to tell you about our latest Insight show. It's now just over a year since HSBC Innovation Banking was launched, following HSBC's acquisition of Silicon Valley Bank UK in March. To find out how it's been going, David Barton sits down with Simon Bumfrey, Head of Technology and Life Sciences, HSBC Innovation Banking UK. Tune in now. It's the podcast just below this one on your feed. All right, now back to the news. And this one is from Fintech Futures. UK money management app Plum raises over £16 million in investment. A big win for UK fintech Plum this week, who raised over £16 million. It's the combination of a 13.4 million Series B funding round, but also a highly successful Crowdcube campaign that brought in £2.7 million, which we're going to be talking about in more detail here. Plum says it's the most popular campaign of the year on Crowdcube, with 5,500 individual investors. It's the second set of recent funding for the company after a deal with Eurobank scored Plum £8.4 million back in December 2023. Plum pitches itself as the ultimate smart money app with a user base of 2 million people across 10 European markets. Their goal as a business is to make sure people have more money for life with a combo of smart saving and investing. It has previously targeted profitability as early as 2025. So without further ado, we're lucky enough to have Abhi Choudhary, VP of Product at Plum, with us on the podcast to discuss in more detail. So Abhi, give us a background. What does this mean for you in Plum?
Yeah, so reaching Series B, it's a massive milestone for all of us at Plum. The last 12 months, teams at Plum have been added. It's a massive effort behind the scenes, everyone working towards it. It showcases how much effort has gone into kind of building out this product to help so many customers. Though it's not just the refueling, right? We have hit some major milestones along this journey. So we have over 2 million customers now. We are holding over $1 billion in assets under management. We have doubled our revenue over the last year. So that path towards profitability is still a focus for us to get in 2025. And everything is moving in the right direction. And it's an exciting time for all of us at Plum.
Awesome. I mean, big congratulations. I'd love to talk a little bit more also about the raise on Crowdcube. How do you do it? How do you generate that much interest and insight? Incredible.
Yeah, it's incredible. It's to see so much enthusiasm from retail investors to invest in us. It's a massive kind of vote of confidence in us. And it goes to show community has always been a big thing for us. Right from the early days, we have done Crowdcube few times, and we have always kind of wanted retail investors to come on board on this journey. We have investors who are actually power users of the product as well. We actively engage with our investors. We share news with them. So it's a constant engagement that we keep doing year over year. Every month, we try to kind of engage with our customers. So as this has grown, even the last kind of Crowdcube, we had 3,700 investors that within 8 hours of the Crowdcube. So we always see kind of a good value out of doing Crowdcube, but we also try to make sure that we constantly engage with these users to kind of inform our product roadmap, to kind of actively engage with them. And it's something that I feel is working quite well for us.
I love that you're using it as a way of engaging your community, right? It's not just about fundraising. It's because you have the Series B that goes alongside that, right? It's all of the people that you're engaging as a result of that. Veronica, I'd love to come to you to comment a little bit about, maybe Plum's business model. I mean, there's definitely a gap in the market for investment platforms that demystify or make it a hell of a lot easier to invest and save. Do you see that?
Yeah, and I think Plum is very much of the moment and has been, right, since the company was founded, because I think particularly, so I'll rewind a little bit. So in the personal financial wellness space and in the financial inclusion space, we are now starting as an industry to have a conversation about investment. We're going beyond saying, living wage, beyond savings accounts, inclusion in banking, but inclusion in investment. Because we fundamentally know that, savings accounts or, basically that savings accounts they're just not going to do it for the actual creation of wealth and assets and financial security for a lot of individuals. And so Plum comes in and actually has come in even before that was part of the industry zeitgeist to offer new investment products, but also educate its users in real time. And I think that is so empowering for the consumer, because we're now reaching an age of greater financial literacy where you don't have to be an expert in investment or have a degree in the subject to be able to teach other generations or other users to how to make themselves more financially resilient. But you can be on a scale of 1 to 10. You can be a 5 and you can teach a 4. Or in very simple terms, you can become an autodidact and actually teach yourself. I think that is incredibly empowering. And Plum has been way ahead of the curve on that. So it's very cool to see this new fundraise from you guys.
Yeah, it's so cool. And actually, just to your point, there's a study by HSBC that found that 63% of women and 46% of men do not feel confident that they would even know where to begin with investing. So to your point, it's a huge industry ready to be taken, which Plum is doing. And, hands up, I've used Plum before, and I think it's an absolutely fantastic app and a fantastic focus.
That's true. There's if we see, to your point about the gender gap and the knowledge, right? We know for a fact that there is inequality in financial knowledge and confidence. And we see this so at Plum, we have majority of our customers are actually women. We have 51% women using our product and 49% men. So we see that we are kind of tackling this problem where there is a knowledge gap, there is a comfort to finance. Finance by itself is such a complex topic. I've been in fintech for a while, right? I still wouldn't say I know financials inside out. It's such a complex topic that I feel that taking users through that journey, getting them to understand, helping them kind of build that knowledge over time, where you kind of slowly expose them to products that are easier to adopt, and over a period of time, you mature them into more active investors. But at any given time, our goal has always been to kind of make savings and investments as easy as possible, and to kind of save on time and leverage automations to kind of complete a journey for our customers.
I think it's been a phenomenal success, Abhi. Hats off to you guys for doing it. And just to the point that we were talking about earlier with Veronica, that raising capital right now is not easy, and to have got a 13.4 million Series B away is fantastic. It just proves that there is money available for great businesses and great management teams. I think it's also, you're a kind of fantastic exemplar of everything that fintech has been building to over the last 5 to 10 years. What you do wouldn't have been possible 10 years ago without open banking. With all the advances in behavioral economics. I love the way you gamify some of the things that you do to help people better understand the difference between saving and investing and pensions and so forth. And it's, you're in the right place at the right time, a brilliantly executed, fantastic business.
Thank you, Anthony.
We all love it. Abhi, I'd like just to, maybe give you the final word almost on this, and tell us where goes from here. I know one of the kind of hero features, and you mentioned it just now, is more around automation and setting smart rules and using algorithms to help customers. Is it more kind of doubling down on that path?
Yeah, so we realized when Plum started, right, one of the things when we were talking to our customers and generally trying to understand the market, we realized money inertia is a real thing. You have a lot of people who have savings. And when I say savings, it's just money you kind of put aside in your account. You're not getting interest, you're not investing, it's just there. Breaking that money inertia is what automations kind of enabled us to do, because what we help people do is you don't need to think about it. We will pull money from your account. We will help put it into whatever you want. Is it savings? Is it investments? And that was probably our superpower that we unleashed, and we found that it has massive value for a lot of customers, because without automation, it's just money sitting there, right? It's the time it takes that, okay, at some point in this evening, if I have time, I'll move the money, I'll do something with it, I'll put somewhere, but we've taken that pain completely away, right? You don't need to actively think about what's happening, and we take care of all of this complexity behind the scenes. And I mean, we are rapidly growing, right? Our 2 million user base kind of showcases that there is interest, there is a natural market fit for something like this. And as we grow, yes, like we'll keep increasing our automations. We are live in 10 markets. I think there's a lot of work still to be done in these markets for us to get more market share, to increase the depth. There is a lot of work happening behind the scenes. In the UK, I don't think our product offering is still complete. I think we have a long way to go. So there is a lot of work kind of constantly happening behind the scenes. I can't share a lot at this stage, but you'll see a lot more coming from us in 2024 itself.
We do have to ask him the question, I guess. It could be an exclusive for you, David. Is Abby going to consider getting a banking license?
Great question. Go on, Abby.
It's okay. I think the mission that we are on, right? Like we want to help people break the money inertia, right? And we want to make savings and investments easy. We have the licenses we need to achieve this mission. And I don't think a banking license is like a most critical thing for us to maybe in future at some point if we think about it or if we decide, right? Like, but I don't think what we are set out to solve requires a banking license at this stage. And I think we have the right licenses to succeed in UK and in the markets we are live across Europe. But who knows, like kind of what the future holds, right? Like as we scale, maybe we change and we see that like the license unlocks something specific for us. I mean, I also come from Wise, right? Like it's, I always feel like you have to be very specific in like what is the business trying to achieve. Revolut was always clear that they want a banking license versus I feel, at Plum, like I don't see an urgency for us to try and think in that direction.
It's a slightly different business model, I guess, but it's interesting to hear that it is sort of somewhere there in the future as a maybe. Right. Next up, and this one is from Bloomberg and quite frankly, all over the internet, really. CrowdStrike outage is another sharp warning for banks. So I'm sure pretty much everybody listening to this will be aware of the story. This story broke in between the recording and publishing of last week's podcast, but we feel that it's just big enough and profound enough, and the repercussions will be felt long enough that we just need to discuss it this week. So let's do a little bit of a background, bit of a recap for all of you listening in. A single corrupt file from cybersecurity firm CrowdStrike led to worldwide digital chaos on Friday, the 19th of July. I know that because at Waitrose, the contactless payments. Yeah, you too.
Me
yeah,
too.
Veronica's pointing. Yeah, as well. Just stopped working. That was a slightly lesser problem than people, queuing up at airlines or healthcare systems or banking payments. I mean, everybody was affected. So the chaos froze banking systems and stock exchanges, including big names like Bank of America, Lloyds, JP Morgan Chase. In the US, regulators had already flagged major banks for poor operational risk management, and this incident has just underscored their concerns. Bloomberg says that banks' heavy dependence on a handful of third-party tech providers, especially in cloud computing, is a growing risk, as highlighted by these recent events. They also highlighted that the increasing reliance on a few IT giants means that a larger disaster could also be looming on the horizon. And I think it was just such a profound thing. It's really gone off the news cycle in the last couple of days, which I find very interesting. So, first question for everyone. I mean, was anyone affected directly by this? Waitrose.
I mean, Waitrose.
Yes.
Yeah. So it was, what was that? Thursday morning, or it was last week. I got up in the morning, had to do my groceries. My pantry was empty. And so I went to get breakfast items. I was told the store was cash only, which was very inconvenient. I was very cranky and very hungry. And then I realized I have no cash at home. And I had been raised by my parents my whole life to say, carry a little bit of cash with you. You never know what can happen. And here I was. And I was like, God, my mom was right. But it was in that moment that I actually realized just how, like on an existential level, we societally are dependent on technology. And I think that was a really big wake-up call for everyone.
Yeah, totally.
The cash at hand is so interesting. I mean, I moved to London like some time back, and I haven't had cash ever through my, like I've literally never had cash. And before that, I was in Singapore again. You don't need cash. It's such a interesting thing. I didn't even realize like what happens if the systems go down. I actually don't have cash.
Yeah, it's so true.
Anthony, what does this tell us about systemic risk and vulnerabilities within the global finance system?
Well, the very fact that the entire banking industry relies upon IT-based messaging, it's not surprising that something like this has happened. In fact, in some respects, it's more surprising we haven't had more of it over the past few years. CrowdStrike, it's not my area of expertise, endpoint security, but it is absolutely critical because we're seeing more and more bad actors out there. When I've been chairing, as I mentioned earlier, the last 3 banks that I've chaired, cybersecurity, bad actor risks is one of the things that keeps me awake at night. The bad actors have more money than many banks. They're operating 24/7. And in the old terrorist adage, we've got to keep them out 100 times out of 100 times. They've only got to be successful once. So, you pays your money, you takes your choice. I'd rather that we had great companies like CrowdStrike and others that do the same kind of thing, protecting our system. But you can't protect it 100 times out of 100. There's always going to be some problems. But interesting, I was looking because I suspected this might come up at some data on CrowdStrike, and although their share price has fallen something like 24% in the past 10 days, they floated it, I think it was around about 7 billion, and they reached 70 billion. So it's come off a quarter. It's still a very, very valuable company. But their CSAT scores are 8.9 out of 10. So customer satisfaction scores are really high. And 93% of their customers say that they're going to renew. So it's like the devil you can't live without.
Yeah, they're critical, right? I mean, even with this era. I mean, one of the things that's always puzzled me, I mean, I've been working in consulting for big banks and fintechs alike for many, many years, is the extent to which these IT infrastructures are just so vast. Because it isn't just about the file that gets loaded and then you have the cascading error. It's about rebooting these systems and figuring out the interconnections between them to get the whole infrastructure back up and running. And in very, very many cases with a lot of big incumbent banks, it's very difficult to figure out where those systems are and what they are. I mean, why do we think that this is such an issue? I'm just going to quote a stat here from the US regulator of the Office of the Comptroller of the Currency, also known as OCC, which found that half of the US's 22 largest banks it oversees have a poor grasp of operational risk. Why has it not been a big enough agenda item? Is it just too expensive, or do we think there's another reason?
I think one of the reasons that people like Abby have been so successful is in part because of the appalling state of the IT of most UK banks. And it provides a real opportunity for companies like Plum to give a better customer experience, a more efficient customer experience. It's very unlike me to say anything nice about big banks, but I do have a little bit of sympathy with the challenge in upgrading their systems. Many are still using systems that go back to the 60s, not in their entirety, but they have parts of their business. They might have 300 different IT platforms. And the problem is not the availability of state-of-the-art software for these banks. There are some great providers, the Temios's, Fiserv's, FIS's of the world who have really, really good platforms. The challenge has always been around data migration. And pretty much every big data migration around the world has failed. Remember what happened with TSB a couple of years ago. So the challenge is not the ability to put in place better technology that can solve some of these problems. It's the risks associated with mass migration of data that most banks want to try and avoid.
And Abby, this puts you in a better position, right? Or fintech in general.
I mean, I don't think I would hate to compete in this way where we are because the banks are suffering, we would succeed. But I think Anthony brings up a good point, right? I have friends in the banking industry, and some of them like software developers, right? And I know like you have like these mainframe system. I mean, a lot of these banks are like from 50s, 60s, even before that. And you have kind of incurred so much legacy that over a period of time, no one actually knows what where sits, because people come in, people are move on with their lives, someone else joins, they don't know what happened. Like, it's just so much history. And that's why these migrations and these changes become more and more complicated. And it does give an edge to a Revolut, a Monzo, any like cloud-based ecosystem. I mean, the world is changing very fast, right? Like, I mean, we are living in a time where like most of these neobanks are cloud-based, and they actually don't have like these mainframe servers sitting somewhere. Like, and I feel like, yeah, it is something for the banks to kind of change. And I mean, I'm not a fan of big high street banks. I am fintech to my core. So I feel like it's a long way for these big banks to go and kind of move towards modern technology. If they don't manage to do that, of course, I mean, dinosaurs don't exist, right? Like, it's a thing. So we have to kind of, I hope that they evolve and they start kind of ramping up to change their systems.
Yeah, I hope so. I mean, one thing we haven't covered, which is a rabbit hole we won't go down to, is when you mash this up with geopolitical risk, you get all sorts of problems. I mean, to your point, Veronica, about cash, should we all be buying burner phones and living in bunkers?
I mean, no, but
maybe.
No, but I mean, but it might not be a bad idea to carry an extra 20 with you.
Yeah.
These are the. I think we have an opportunity here to look at this as almost a practice for if something like this were to happen again and it was a bad actor behind it. Hopefully this is a wake-up call for industries at large to identify actually where they have operational risk, even where there are gaps in tech literacy or the financial culture or the company culture of accountability as they go through their own digital transformation or data migration processes. So hopefully this is a wake-up call. I think we can actually consider ourselves to be quite lucky that this was a fluke. We might be able to laugh about it later, but that's the thing, is we might be able to laugh about it later and prevent it from happening on the side of a bad actor.
Indeed. Right. Now for a quick look at a more click-worthy news story this week that we don't have time to cover in full. And this one comes from Finextra. Monzo launches pensions product. The UK Challenger Bank has launched a new pension consolidation feature, helping customers track down and combine old pensions into one fund in their app. This is Monzo's second big product launch in the space of a week, following the unveiling of their new kids account that we covered on last week's podcast. Customers just provide a few details about former employers, and Monzo takes care of the rest, pooling the pensions into a BlackRock-managed fund. The service comes with a 0.45% platform fee, reduced to 0.35% for premium Monzo users, plus a 0.18% fund fee. This announcement comes as Monzo unveiled new research that shows that over half of UK adults aren't sure how much they have saved for retirement, and nearly 2/3 haven't consolidated their pension pots. So I think this is great. And this is another example of all of the challenger banks really launching feature after feature that extends beyond retail banking and into investments and pensions. I think the interesting thing to see, I mean, this isn't the first company that's done this. I mean, PensionBee in the UK is probably the most well-known. They launched actually quite a few years ago now. One of the interesting things will be to see customers' mental model of money. Do you want to consolidate all of your investments and your future pensions under a single bank? Or do you like the idea of actually having your money split across different banking providers and different investment funds, etc.? So it'll be very interesting to see how this plays out over time. Right. So it's time to talk about something a little bit more lighthearted. And this is the And Finally section. And so in And Finally, we take a look at something a little bit more lighthearted from the world of finance. And we're sticking with our friends at Monzo for this one. So this one's from Chronicle Live, although it's gone quite viral. Greggs launches pop-up sausage roll dispensing ATM in Newcastle city centre. So in a fun twist, UK high street bakery Greggs and Challenger Bank Monzo teamed up to install an ATM, or cash machine, in Newcastle that dispenses free sausage rolls, which is a much-loved thing in the UK. I mean, we love Greggs sausage rolls. It's incredible. But not cash. So no cash, just a sausage roll. The collaboration started with a playful exchange on X, formerly Twitter, where Monzo challenged Greggs to make it happen after a tweet imagining sausage rolls dispensing from ATMs. The pop-up has been a hit, drawing huge queues of people eager to try this unique unique vending experience, probably at 3 a.m. after a club. Earlier this year, Monzo launched a free sausage roll perk for their customers, resulting in over 80,000 savory treats being claimed so far. So first off, I mean, Abby, you're kind of relatively new to the UK. Have you had a Greg's roll yet?
Not yet, but I've heard great things. It's on my now things to do. I was actually thinking about going down to Newcastle just to try out this vending machine and check it out. It's such a cool marketing thing to do. I was really impressed by Monzo on this. I was like, that's a very, very smart move.
It's so cool, right?
Yeah. David, this is where we should have gone when Waitrose wasn't there for us.
Greg's.
Well, I'm actually from Newcastle, so I know exactly where that Greg's sausage roll dispenser is. And what I can tell you is that after Newcastle United, Greg's is probably the most important thing in the Northeast. And I think Monzo are going to have to watch out, because if Greg's decided to start a bank, everybody in Newcastle will switch to them tomorrow.
I think this is so clever on Monzo's part.
Yeah.
It's so, they've partnered with something that is so unexpected, clearly gets that viral attention, because we in the office were talking about it as well, right? Everyone was talking about it. But I think they did something really clever in partnering with a brand that is just fundamentally beloved and universally popular as well. And that connects fintech to a very different audience in a non-technical, neutral platform, but something that gets to people's hearts. So I've also never had a sausage roll myself, so maybe I don't know what I'm talking about. But
it's delicious.
but it is true. I just think it was clever on multiple fronts, on going to a different UK city, to really the brand that they partnered with and how they connected to a cultural zeitgeist.
Yeah, I totally agree. Well done, Monzo. Also, when Greg's launched the vegan sausage roll, I think it almost broke the internet in the UK.
I think that was part of it as well. As Greg is another brand that gets the cultural zeitgeist.
Absolutely get it. No, it's an amazing collaboration. All right. Thank you, everybody. And that wraps up this week's Fintech Insider News. Thank you so much to today's guests. Where can people find out a little bit more about you and your companies? Let's start with Anthony.
ArchieGrowth.com.
Awesome. Abby?
With Plum.com is where you can find everything about Plum. If you have great ideas, if you want to reach out, then hello@withplum.com is our email, where you can send in suggestions, recommendations, things you would like to see on the Plum app.
Awesome. And Veronica?
You can find me on LinkedIn at Veronica M. Glab, or on my way to Greg's.
Amazing. And as for me, you can also find me on LinkedIn at David BG. Thanks for listening, everyone. If you like what you've heard, please follow our podcast and don't forget to leave us a review. It helps us to make a better show and helps others find us. As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider, or email podcasts@11fs.com. Thanks very much and goodbye.
Keeping up with all the noise and news from the world of financial services isn't easy. It's easy to get lost in buzzwords, jargon, and industry speak. So sometimes you just need a quick human rundown of the biggest stories. Well, you are in luck. Bite-Sized is our very own weekly newsletter that takes the biggest news stories from financial services and tells you exactly what's happening, why it matters, and what comes next. Bite-Size goes out every Friday at 11 a.m, so you can enjoy it with a coffee as you wrap up your week. Stay up to speed with the fast-moving world of financial services and subscribe today at 11fs.com/newsletters. That's 11fs.com/newsletters.